Hi, hello, and namaste to all of you. This is CA Dhananjay Bhave. I welcome you all for my new short video on CA Inter Financial Management Special Concepts. In this video, I will be covering the concept of overcapitalization, causes, and consequences. Before that, let me make a small announcement about our new batch coming up on Unacademy. As you're aware, Yash's Academy is now in tie-up with Unacademy for all online classes. We are coming up with CA Inter Group 2 100% English batch for May 2022 and November 2022 aspirants. Yes, the batch name is Excel with Yash's Group 2 classes. The batch is starting from day after tomorrow, that is 15th December 2021. This batch is for all those who are writing in May 22 and November 2022. Here are the educators who will be taking all the subjects of group 2: Meeta ma'am, Rajwardhan sir, Mayur sir, and Karthik sir, and also Shandar sir, and I will be sharing economics in FM. Mrugesh sir and Ravikant sir will also be there in group 2 classes. So here are the details of the subscriptions. With one subscription you get all the benefits like live interactive classes, unlimited recorded classes. You will have the access. Not only this batch educators, you can even watch the classes of other educators, doubt solving sessions, and also practice mock papers. You can go for two types of subscriptions, either plus subscription or iconic subscription. When you take up this subscription, do not forget to use code YESHAS, YESHAS. You will get 10% discount at the time of fees payment if you use this special code. I will be sharing this PDF along with this video in the description box. You can download and go through. Iconic program, just like plus subscription, we have iconic subscription which comes with all the benefits of plus subscription plus some additional benefits like one-to-one personal mentoring, doubt solving, evaluated test series, and also printed books. So look nowhere else for group 2 CA intermediate. Please join our batch. We are starting from December 15. Yes. Let's come to the main agenda of this video. I will be discussing a lot of short concepts. I'll be making a lot of small videos in FM. Here we are with the first concept, overcapitalization. Why overcapitalization happens? First, let's understand the causes. Causes is reason. Number one, when company raises more money through issue of shares or debentures than what they can profitably employ. What does it mean? I have a business idea for which I need 5 lakh rupee funding, but I convince people to fund me 25 lakh and all of them trust me and they apply for my company shares. Now I have 25 lakh rupee worth of shares with me. Money is with me. That means my company is overcapitalized. I have good business ideas only to the extent of 5 lakh rupee investment, but I have 25 lakh with me. Second, borrowing huge amount at higher rate than rate at which company can earn. Now company can effectively earn 8% profit on the investment, but they take loans from banks at much higher rate. Example, 12%, 13%, 15%. Say one bank approached a company stating, we are ready to give you loan, unsecured loan, no papers, no documentation, it will be processed in 24 hours. Take the loan. It's a very big offer, great offer. So company just went ahead. Now before taking loan, you should check, do you have the ability to earn more return on investment than the rate of interest that you're paying? Example, if I'm taking a loan at 12% interest rate, I should have good business ideas where I can make more than that 12%. I should be in a position to make at least 12.1%. Otherwise, taking loan at 12% will be a very, very bad decision. So just because someone is offering you loan, taking it at a very high rate is a very, very bad decision. Third, excessive payment for the acquisition of fictitious assets such as goodwill. When you take over another company, you overestimate their goodwill and pay more, and for that you again take loan and you pay, correct? It is discharging the purchase consideration when you merge with another company or when you take over another company. Now you overestimated their goodwill, so you had to pay them more. There was no money, you took loan and you paid, and now you have very high loan and also high amount of goodwill, but goodwill you cannot encash it. Now you have a situation of overcapitalization. Wrong estimation of earnings and capitalization. What is this? You think you can earn more. You think your business idea can generate more profits. Therefore, you went and convinced banker, please give me more loan. With higher amount of loan, I can expand my factory, I can produce more, I can sell more, I can make huge profits. But in reality, you had no market demand. You overestimated your possibility of earning. Now, hoping that you will make so much money, you took so much of loan. Now, the loan is a burden. You have to pay interest, but there is no market demand for your product. You are not able to generate earnings. All these will create a big problem to the company. That's called overcapitalization. Now, what happens after this? Consequences. Number one, considerable reduction in the rate of dividend and interest payment. You will have so much of money, but you have no good business idea. So the money will be idle, unutilized. Now, from unutilized funds, how can you generate profits? Correct? If I have money, I have to use it somewhere. If I have a business idea, I will use it. I have a business idea which requires just 5 lakh rupee, but I have taken 25 lakh loan. 5 lakh I will use. What about balance 20 lakh? It will be unutilized, it will be idle, but then my shareholders will be expecting return on full 25 lakh. Or if I have taken loan, banker will be waiting for interest on full 25 lakh, but I will have no ability to pay because I did not use money. Money is kept idle. Second, reduction in the market price of the share. If I don't pay dividend, shareholders will ask me a question. Right, boss, we gave you so much money in the form of shares. Where are you using it? How are you using it? Where is our dividend? And if you don't have the answer, then shareholders will lose interest in your company. They start selling the shares. When too many people start selling the shares, nobody wants to buy it. Automatically, you know what happens? The price of the share falls. Third, resorting to window dressing. What is this? Now you will start looking at all illegal ways and means. You have taken more money, you did not use it productively. Now shareholders will be unhappy if you don't show them good profits and dividends. So you start doing what? Window dressing. What is window dressing? Showing more profits than what actually you have, showing more earnings, paying them more dividend. In reality, is your company really worth so much? The answer is no. Have you really made so much profit? Answer is no. Window dressing is this itself. Overvaluation of asset, under recognition of liability, showing more profits than what actually it is, hiding the expenses, boosting the incomes, right? By all of this, one objective that you're trying to achieve is show good profits in the books, keep your shareholders happy. In reality, is your company really making that much profit? The answer is no. Next, some companies may opt for reorganization. This is something that you study in accounting. The chapter name is Internal Reconstruction. There you will try to downsize your organization. You will have to go to all your creditors, banker, debentures, shareholders, ask them to accept lower amount, and that's a very bad sign. And if you do a big mistake of taking too much of money, that too from debt, then you read the next line. However, sometimes the matter gets worse and the company may get into liquidation. If it is share, then you don't have a legal liability to repay. If you have money, you will repay. That is the nature of equity shares. If you don't have money, equity shareholders won't get anything. But what if it's a loan? What if you have taken money from individuals, unsecured debt? Now they can file a case against you, then you're not able to pay, then finally what will happen? Company will get into liquidation. What can come in examination? A short notes question on overcapitalization, both causes and consequences. What is the opposite of this? Undercapitalization. And what will happen will just be opposite of whatever I discussed. Undercapitalization, though it is a problem, in a way it's a good problem. Why is it a good problem? You need 5 lakh funds, but you have only 4 lakhs. Yeah, this is undercapitalization. Why is it good? Now you are careful. You are very cautious about spending because you have much less than what you want. The problem is when we have more, not when we have less, whether it is time or money. That's a good example to remember this. Yeah, thank you so much for watching this video. Take care. Bye bye.